Okay, good afternoon, everyone, and welcome to another College and Career Pathways, where every Monday, Wednesday, and Friday we provide you with information on various colleges and universities, financial aid resources, training schools, technical programs, skilled trade professions, employment opportunities, career readiness skills, all designed to help you make the best career decisions possible. I'm Tony Curitin, your host, and today we are back with Michigan Schools and Government Credit Union. And the subject today is understanding um, a basic understanding of life insurance. Thanks so much, Colleen, for coming back. We're so glad to have you.
To be here, as to be here. Today's topic, an intro to insurance as a whole, and there's lots of different kinds of insurance, excuse me, and how does it work? How does it all work, including life insurance?
Hello, what do we have here?
Planet Earth, home to all of mankind's greatest achievements. Superglue, the atomic clock, the hula hoop, and yet none so grand, so thrilling as insurance coverage.
Oh,
Life, auto, health, home, travel. These are but a few of the diverse insurance policies available to you.
who, me?
Yes, you. Insurance is a contract that offers full or partial financial compensation for loss or damage caused by an uncontrollable event. In exchange, the insured individual pays a sum of money known as a premium.
Okay, but how does it all work?
How does it all work, you ask? By taking out an insurance policy, you are actually paying the insurer to assume your financial risk in the situation specified in your contract. Take little Jenny here, and her darling pet cat.
How?
Little Jenny pays $20 a month to have her furry friend insured against accidents and illnesses, thus transferring her personal financial risk should her cat need medical attention. But what's this? Calamity! Little Jenny's cat has broken its leg during hockey practice, racking up $2,000 in vet visits, x-rays, and tiny cat crutches. Thankfully, little Jenny's pet insurance policy covers broken bones and reimburses her for the medical expenses after she files a claim.
How are insurance companies able to pay for all those emergencies?
Insurance providers operate by pooling the risk of a large number of policyholders. Little Jenny is just one of many pet owners paying premiums every month. Over the lifetime of the insurance policy, some pets will have medical emergencies, and most will have no complications at all. The premiums of many are pooled to pay out the emergencies of a few.
Huh. Does everyone pay the same premium?
No, they do not. I mean, you might be asking yourself, does everyone pay the same premium? Insurance providers set premiums that allow the system to function and generate a profit. If premiums are set too low, if emergency costs are higher than anticipated, or if more individuals make claims than expected, the insurance provider will lose money. Insurance providers therefore apply statistics and mathematics to understand the amount of risk their policyholders represent and adjust their premiums accordingly. It's why your age and gender can influence your car insurance rates, or why your family medical history and lifestyle can influence your life insurance premiums. Indeed, insurance coverage is a unique system unequaled by any other financial concept on Earth.
Shh, there might be stuff after the credits.
You might be asking yourself if there is additional stuff after the credits. And the answer is no. There is not.
Intro to insurance. So insurance basics. Insurance is a contract. It's a safety net. The symbol of an umbrella, you'll often see that representing insurance, you know, something protecting you from the rain, something you have just in case of rain, something that protects you in an unexpected event, uncontrollable event. You know, that's what we call, you know, the fickle finger of fate, or, you know, life's little surprises, all of these things that happen that we have no control over, aren't our fault, could be weather related. Maybe it could be our fault. You know, we lose some bills, we lose the house. But it's contract in order to protect ourselves, protect our items, our family, what's important to us, for almost anything. Which, when you think about it, and you're paying an insurance premium for 1, 2, 3, 4, you know, how many bills here? Oof, that's a lot of bills. That's a lot of money every month, and we're just talking kind of one type of bill. These auto insurance. Auto insurance, I know you've heard of. Car insurance. It's something you pay every month just in case you get into an accident. And depending how serious that accident is, your insurance covers the repair costs, or it covers to replace the vehicle, or maybe if there's theft or, you know, something damaged or stolen, the insurance covers, you know, the replacement of, you know, a new window, or, you know, a new catalytic converter. So that you're not stuck paying for those repairs or that damage all at once. People go into new businesses. We were just talking about a new business plan and being really excited about it and putting all your passion and enthusiasm in it. That doesn't necessarily mean it's going to be a success. And if you buy a lot of equipment, you know, if you pour, you know, thousands and thousands of dollars into a business that's profitable, end up losing all of those items. How are you going to support yourself? Renter's insurance. We talk about homeowner's insurance down here, which is to replace your home. So let's say there's a tornado or a fire and your home burns down. Your homeowner's insurance replaces the, you know, your home itself. Insurance, let's say you're just renting a place. Well, if the apartment complex burns down, you aren't going to pay to replace the apartment complex, but the apartment complex is not going to replace your personal items. So you would have renter's insurance to replace the items in your apartment that, let's say, burned out or were damaged. Insurance, you may think, well, why is flood insurance in here separately as opposed to tornado insurance and hurricane insurance and fire insurance? There's what they call act of God, you know, things unavoidable, you know, a tornado, lightning strikes, a wildfire, these unavoidable things. This is always somehow separate. You may be covered in your home if it gets struck by lightning, if a drunk driver just drives through your living room, you know, all these crazy things that are unexpected, you'd be covered. But if there's a flood, you aren't covered. And there's special flood insurance specifically in case of a flood. And we've all seen, you know, Katrina and Houston and almost everywhere now, it seems that these terrible floods where people's entire homes are underwater. I mean, what would you do? Your whole home is ruined. Even when the water subsides, it's all dirty and wet and stinky and gross, and all your stuff is ruined. If you have homeowner's insurance but not flood insurance, you may be in a very, very bad spot. Flood insurance is not required. There are some certain areas, if you live on a lake, where you may be required to have flood insurance because of the likelihood that a flood may happen. Health insurance is your body, is medical insurance. When we say health insurance, medical insurance, prescription, vision, dental, that all falls under health insurance. You would pay a separate dental insurance cost. We'll say, oh, well, I'm just going to get a job and they'll cover my health insurance. Or luckily, my job pays for my health insurance. Great. Okay, great. That's a wonderful thing if you can find a job that contributes and offers benefits. But let's talk for a second about those benefits. If someone says, oh, my job pays for my health insurance or covers my health insurance, that doesn't mean you get free health insurance. It means that costly contributing a large amount to it and leaving only a small. So you're getting a great deal and they're helping you, but it's not necessarily free. There are still premiums, let's say dollars every paycheck. Dollars every paycheck. We talked about this when we looked at paycheck, and depending whether you were married or had children, you may have, $300 every month taken out of your paycheck to cover health insurance. But if you or you were a landscaper, you had your own private business where you have to pay for your own health insurance, you're going to be paying a lot more than $300 a month. Homeowners insurance, life insurance. You think, well, what's the difference between life insurance and health insurance? I mean, isn't health your life? Health insurance is what keeps you going, what keeps you alive. Life insurance is if you pass away. Life insurance is not money for yourself. It's money for those you love, for those left behind when you pass away. Sure. It's a horrible tragedy, but anyone depending on them for survival. If a father of 6 who works full time unexpectedly passes away, maybe it's a full-time working mother. Having 6 kids is very expensive. What's going to happen? How am I going to pay for this funeral? How am I going to support my children? How, I feel so lost. Life insurance is, okay, if that breadwinner, if that parent, if that person passes away, here is some money so you can, live your life. So you are able to still support your children. So you are able to pay for a funeral. It's not intended to make you rich. It's intended to make things a little easier without them. So very much, you just rent an apartment, you have a car, you don't have any kids, you're not married. Yeah, it'd be nice to have some life insurance so that when you pass away, someone has the money to pay for your funeral, but you would only need, a few thousand. As you age, as you have more assets, I own a home, I own a business, I have a company, I have multiple properties, I have family, and I'm paying for multiple people to go to college. If I pass away, I need there to be something in place. I need there to be a safety net that's going to, kind of take care of some of these things or keep these things going, be able to make the house payments, be able to make these tuition payments. So you're kind of yourself. You may pay for someone else's life insurance. For example, you may pay for your parents so that you get the money if your parents pass away, or your parents may pay for your life insurance, they get the money if you pass away. Is less about if the animal passes away. I mean, that's sadly also an expensive and tragic thing to go through, but more of kind of like health insurance, medical insurance for pets. Without taking your pet to the vet all year, you don't have to, but we know, we want to check out for vaccines. We want to make sure they're spayed or neutered. We want to make sure they, are up to date on is everything checked out? What if they have a cough? What if they start throwing up? We have a doctor to take them to. There's medicine to give them. Sometimes there's surgery needed. What if they get hit by a car? What if they break a bone, just like it says? Insurance, and you get hit with a $2,000 bill. Hey, if you want to fix your cat's broken leg, that's $2,000. That's a huge amount of money. So those with pets, sometimes take out insurance so that if something does happen, it's not as tragic to their pocketbook. Travel insurance. Travel insurance is not something you necessarily constantly pay for on a monthly basis. It's only something you would take out specifically for a specific travel occasion. You're planning a cruise a year in advance, right? A lot of times you plan, if you, let's say, have a couple different families coming, everybody's got to take a whole week off of work, so you plan really far in advance. Well, what if something happens? What if there's a hurricane right before you're supposed to leave? Or what if somebody gets sick? What if there's a terrible snowstorm and you can't leave the airport where your city is? It's protecting your travel so that you don't lose all of the money. Oh no, there was a hurricane. I guess we're not going to go to the Caribbean, and I guess we're just going to lose all of the money we put into it. Paying a little bit now in case something happens later is, it's setting up a safety net. Question here. So is life insurance just money you put into a fund that you get back when you die? Not quite that simply, and there is work. An insurance policy, you're paying the insurer, you're paying the company to assume the financial risk. So you're saying, I'm going to pay a specific amount each month. Something happens, because if something happens, it's putting the risk on that insurance company. Well, $20 a month for her cat. I personally have a cat. I know just taking him in to get, looked at, get his nails trimmed, that's at least $100. So, you've got to take care of your pets. You can't, if you don't feel that you can take care of its health, that just comes part of the package. So let's say you spend $20 a month just in case the pet gets sick. And then something happens, it jumps out the window, it jumps off a table, it breaks its leg. When you count up the doctor visits, the x-rays, the surgery, the pain medication, $2,000. That's a lot of money. I mean, that's a lot of money. What are you going to do? How are you going to pay for that? Well, luckily, because you have been paying into a system, you have been paying that $20 a month. And it doesn't matter. Let me remind you, maybe I started this insurance 3 months ago and I've only been paying $20 a month for 3 months. Maybe I started a year and a half ago and I've been paying $20 a month since then. When I start, it's from then on, I'm protected. dollars I paid would be reimbursed. I would still have to pay for it first, pay the, the vet company, and then I would send a claim that says, I paid for this, this should be covered under what I pay monthly. Then you'll get something back that says, you're right, here's your refund check. Or how if I only paid $20 a month for the last couple of months, how are they paying $2,000? That doesn't seem like something a profitable company would do. Well, let's look at the steps. Providers operate by pooling the risk of a large number of policyholders. So I am one person. I'm one person paying $20 a month, right? They're not making too much money off of me. But let's say every single person in this building, all 150 workers, we're all paying pet insurance. We all pay $20 a month, okay? So that's quite a lot of money. Of broken leg. Is every one of our cats going to get a broken leg? Not likely. It's likely that maybe only a couple of us are going to have to make a claim for surgery, for something expensive. So it's all of us in the building who pay our $20 a month together, that money together ends up covering and paying for those few people who make claims. Back, let's say it's the end of the year. You say, I paid $20 a month all year and nothing happened to my cat. Shouldn't I get that money back? No, you do not get that money back. That's part of the deal. It's kind of a gamble. It's saying, I'm going to pay $20 a month. Maybe you go 5 years without anything happening. I mean, that's wonderful for your cat, but it's a safety net. It's a just in case, right? You have it set up in case something happens. You don't want to start shopping around for insurance after you've already totaled your car. You're not going to be able to get any insurance. And pay the same. No. And if we think back to credit and your credit score and how not everyone pays the same for the same item because of credit, insurance is kind of similar. Not everyone pays the same amount, and it depends on you specifically as a person, depending on the type of insurance we're talking about. If we're talking about, let's see, premiums are too low. So if we're talking about auto insurance, how can I guess how likely you are to get into an accident? Well, your credit score is looked at. If you have a great credit score, you're probably a rule follower, you're probably organized, you're probably going to stop at stop signs. If you have a very low credit score, you're probably reckless, you speed, you run red lights. So those are assumptions, so you might have a little more. Depends on the type of car you drive. Do you have, a brand new, very expensive car? And if you were to get into an accident, it would cost a lot of money to fix it or to replace it. Well, that's certainly going to cost you more than if the car you're driving is 10 years old. That's not worth as much, so it might just be totaled. They're probably not going to put as much money into it. That would be cheaper. Your age, if you're a 45-year-old person, 45-year-old adult, you're going to pay most likely less in insurance than a 16, 17-year-old who's paying for insurance on their car because they have less experience. Just by definition, they have less experience because they haven't been driving as long. So they are more of a risk. So in terms of how much is your car insurance, it depends on all those things. It depends where you live. How likely is your car to get stolen? Do you live in a zip code with a lot of other crime? So certainly which state, which county, which city, all of those things are factors. For young people, grades. If you show, all A's or a great report card to a car insurance company, sometimes you'll get a deal. You get a deal on a lot of things for good grades. Insurance providers try to find that perfect match, right? How much can we charge people where they're willing to pay us, but we still have to pay out these large amounts of money, but we still want to make a profit? Where is that balance? How much does that cost? How risky is this person? It's a lot of formulas. It's a lot of factors and statistics to make sure I have enough insurance. Well, let me rephrase that. What do you have that you think needs protecting? You need to protect your auto. Do you have an auto that if anything happens to it, you know what, it's not worth anything? If it crashes into a tree, I'd rather just leave it there. The whole car is worth $500. Or if it's a car that you still have a loan on, you bought a year ago and you're still making payments on, you're required to have full coverage insurance on it. So you're required to pay, a certain amount of insurance every month. Do you have renter's insurance? Do you have homeowner's insurance? Do you have life insurance? You should understand what type of financial compensation each insurance provides and what is your need of it. Do you have a home to protect? Do you have children that are relying on you? You can speak with different insurance brokers, tell them your situation. They'll help you decide on lots of different options. You shop around for insurance, just like you shop around, for anything else, for cable, for electricity. Replacement cost. And replacement cost, you'll hear especially when we're talking about homeowners insurance or home insurance or vehicle insurance. And it's literally how much would it cost to replace it? A brand new car today for, let's say, $30,000. You drive it off the lot, you need to have car insurance, right? You need to have insurance in case something happens. Well, maybe get into a car accident driving it home from the dealership. It's, I'm sure, happened before, and your insurance company would have to cover it if you already had this plan in place. So how much would it cost to replace that car? That's how much, your premiums are contributing towards. The longer you have that car, the older it is, maybe depending the value of that car. If it's a home, how old is the home? Does the home have upgrades? Does it have hardwood floors versus carpet? Does it have a finished basement versus a not finished basement? If you were to rebuild the same house again, how much would it cost, right? And then from there, if the insurance company had to pay that much, how much do we need from you to try to make it worth our while? You see, it's a lot of calculations and formulas and guesstimations. How likely is it that something's going to happen to your house? Well, how much would we have to pay? A deductible. This is a very important term, deductible, and you'll hear this term with any kind of insurance. A deductible is the portion that you are still responsible for paying of this uncontrollable event or this, this claim you're putting forth. Something was stolen, something was damaged, something needs to be replaced. Insurance has a $1,000 deductible and a tree falls on your roof and it costs $5,000 to fix your roof. You as the homeowner are responsible for paying that first $1,000, and the insurance company will pay the rest, that $4,000 difference. So that, for the sake of argument, let's say $20 a month that we're paying towards homeowners insurance. All right. You may have a $500 deductible, meaning that you'll pay the first $500, and then after that, the insurance company pays. For vehicles, cars will have either a $1,000 or $500 deductible, meaning you still pay a monthly, certainly a lot more than $20 a month, let's say at least $100 a month for car insurance. Even if you've been paying your full $100 a month every single month, you get into a car accident, it requires $5,000 worth of repairs. If you have a $1,000 deductible, you still are responsible for covering that first $1,000, and then you'll be reimbursed after that. You may have a $500 deductible. So I believe I referenced this at one of the previous presentations I did, where I had my catalytic converter stolen. Someone literally sawed it off my car. I turned the car on and it sounded like, a hurricane. So I made a claim. It's very expensive. A brand new catalytic converter plus the labor to install it was, I think, over $2,000, which, I mean, that's crazy. I don't have $2,000 lying around. So I made a claim with the insurance company, and I had a $500 deductible. So even though I pay insurance every month, I still had to pay that first $500, and the insurance company covered the rest. So even though luckily I had this safety net, luckily I had insurance to cover the other $1,500 I didn't have to pay, having insurance doesn't mean, it's free beyond that. The question is, how can I lower my insurance costs? Well, think about it. $500 and they paid the rest. If I changed my insurance and said, you know what, pay the first $1,000, will that lower my monthly costs? They'll say, yeah, definitely. If you pay more, if an emergency happens, then we'll lower that monthly cost. So that may be a way to help you lower, your month-to-month costs. But again, do you understand that means, man, I got to come up with $1,000 right now if I want to fix my roof, if I want to fix that catalytic converter, if I want to, fix the furnace. You could have even lower, potentially like $250 deductible, but then you're going to be paying more and more each month. So each specific person's situation is calling for life insurance, not calling for life insurance. They're calling to say, hi, I'm interested in life insurance. How much is it going to be? And they say, okay, well, I have a lot of questions for you. How old are you? Because, well, let's think about it. The older you are, the likelier you're closer to death, right? Just by nature. If you're 80 years old, you're more likely to pass away in 10 years than you are if you're a 30-year-old or a 50-year-old. What kind of health issues do you have? Have you ever had cancer? Are you a diabetic? Do you have seizures? Do you have allergies? What kind of, oh, you're a smoker. Oh, you're a smoker. Well, you are very, very likely to have a lot of health problems in the future. So we're definitely going to charge you more, a month for your insurance because you are a riskier person to take on. You are more likely to have, I should say your health insurance and your life insurance be more expensive because you're more likely to have issues. If you are very, very overweight, you're more likely to have heart issues, diabetes issues. So it's predicting in the similar way that your credit score is predicting how well you will pay back a loan in the future. Your insurance costs are predicting how likely tragedy is to strike. How likely is it you're going to need some health care? Your vehicle is going to need repair. Your items are going to need replacing. Your pet is going to need surgery. You know, it's all these complicated what ifs. But think about it if you don't have it. Insurance, you're really sending yourself back to, you know, hundreds of years ago. You know, you're in the middle of the prairie and your house burns down. In that situation, you want to be able to say, oh, I prepared ahead of time. It's terrible I got in this accident, but at least I have coverage. It's terrible that my animal is injured. I mean, imagine if your child or your pet, they have a broken arm, they want to go to the doctor, they need medicine. If you don't have great health insurance, or I should say you can't afford great health insurance, expensive to pay for things on your own. And if we're looking at health insurance for a second, and that's been a big topic of conversation, you know, it's too expensive, lower healthcare costs, prescriptions are too expensive. Well, think about it, pharmaceutical companies, you know, medicine companies, companies that make crutches and aspirin, they're businesses, they're for-profit companies. So they want to make money. You to take more pills, if they can convince a doctor to prescribe you more medicine, if they can convince a hospital to order more tests, pay more. Convince the hospital to do all of those things, that means the insurance company has to cover those things, has to pay for those things. So now the insurance is paying more money. So they're going to charge us more money. You know, they're going to charge us more money because we're more likely to have higher costs. A medical company who makes, let's say, a specific medicine, a specific metabolic disease medicine, and it's one of a kind. It just by 2-3 times, and this $100 a month pill suddenly costs $300 a month. Insurance isn't going to cover it, or maybe you have to pay out of pocket up to a certain amount. It's very important, these little details within the insurance, because it's not as simple as I pay you a monthly cost and then you just cover everything. I wish it were that simple, and that's a very blanket statement to say I pay you to make sure I'm taken care of in an emergency. How it is, but how taken care of are you? How much are you still going to have to pay? How difficult is it? How do I prove these things? I can't just say my car is stolen. You know, I have to have a police report. I have to have actual proof. They're not going to just hand me a check that says, okay, well, here's the cost of your car. Insurance, the relationship with your insurance company, the longer you are a loyal customer who pays on time, who doesn't make claims, right? You don't get in car accidents. You don't have a bunch of broken bones, or you don't have, you know, a bunch of trees falling on your house. Your insurance costs will be lower, right? The more you use insurance, the more in accidents you get in, the higher your costs are going to be. You know, the more medical procedures you need to have, the higher your insurance costs get. Which again, you're saying, well, is that fair? Well, unfortunately, fair isn't necessarily a factor in it. So cost versus risk is a very important question. and sometimes difficult decision to make. You know, sometimes you take a job or stay with a job simply for maybe the insurance benefits they provide, or whether to accept one job over the other. The benefits, whether they provide any life insurance, whether they provide any health insurance, can be a really big factor in accepting a job or not. And it's not just, you know, the out the door pay, whether they offer pet insurance. You know, your company may not even offer insurance, you know, or they may not cover your spouse. So certainly when you're looking for work, you know, these are questions you want to ask about. A lot of detail. So this was kind of a basic blanket coverage of some of the different types of insurance. Let's see, we'll go back to necessarily always have to pay for all of these. So myself personally, I pay for auto insurance. I pay for my homeowner's insurance. I pay for life insurance. I do pay for life insurance for myself. I don't have pet insurance. I've not paid for travel insurance. I do pay for health insurance through my job. And I do not pay for flood or renter's insurance because I have homeowner's insurance, and I don't have a business, so I don't pay for business insurance. Are there any questions? Let's see, I mean, go back to the question that was asked previously. So life insurance is money you pay into a fund and you get it back when you die. You get money back when you die. You don't necessarily get the exact amount you put in. It's not as linear as like an account. You're making deposits into an account, and then when you pass away, you know, your family gets access to that account. It's similar in that you are making deposits to a fund, but no matter when you pass away, no matter how many deposits you put into it, the amount that, you know, your family receives, or the amount that, you know, your beneficiary, whoever you designate the person to receive that money, they'll get a set amount. Sometimes it's $25,000, $50,000. Unfortunately, you'll hear in true crime a lot of times, you know, oh, the wife was murdered or the wife passed away. And then we saw that the week before the husband took out $1 million insurance policy on the wife. And then the wife, you know, mysteriously disappeared. Or that's a huge, you know, red flag if someone suddenly raises the amount of insurance from, well, I need $50,000 of life insurance on my wife to I need $1 million of life insurance on my wife in case something happens. And then something happens that looks very, very, very suspicious. Same way if a business suddenly burns down right after it gets insurance. Things like that. I actually just listened to the craziest podcast yesterday. And it's about this city. It was about this city in Florida. And I think it was in the 70s and 80s, where people were taking out health insurance, specific insurance on their limbs. Because think about it. Let's say you're a professional boxer, you're a model. You know, you might have special insurance just in case something happens to your hands, or what if something happens to your face? You can't, you know, continue on your career as a boxer or as a model, right? So even if you didn't lose your life, you know, you may have lost your career. So this disability insurance people get, and they started cutting their own limbs off. And they would have like lose one leg and lose one arm. And it was 66 people in one town who all had made these dismemberment insurance claims. And it finally got, you know, investigated and realized that people were doing it on purpose in order to get money. And it's, oh my goodness. So there's always loopholes, but it's something like a credit card that when it's used properly, it's a safety net. It's there to help you. It's a positive thing, but you just need to know what you're getting into, need to know what you're signing up for, need to ask questions, and, you know, there's an amount that's just right, just enough. all insurance is not built equally. Any other questions about insurance?
You guys got any questions? It was a great presentation, as usual, Colleen. So on those Dateline shows where they're taking out 1.4 million, they're not getting paid.
Looking from an outsider, you're like, you know they're going to see that, right?
That's funny. That's really funny. Well, if there aren't any more questions or comments, then we will bring this to a close. Thank you guys for joining. Thanks so much, Colleen. Information was really invaluable. It broke everything down to a very simplistic understanding and overview of what each type of insurance provides and, you know, how it works. So again, I thank you. Thanks everybody again, and everybody have a great week in a weekend, because it is Friday. Thank you guys.